All right, let's get into it. If you've ever thought about investing but maybe felt like, it's just too complicated or I'm too scared to lose my money, then you are in exactly the right place. We're going to break it all down and give you a simple playbook to get started building wealth and to do it with confidence.
Okay, so let's just kick things off with a huge question. I mean, we all hear it, right? Investing is one of the best ways to grow your money. So, why don't more people actually do it? What's the biggest thing holding them back?
And you might think the answer is, well, I just don't have enough money. But you know what? For most people, that's not it. It's something way more powerful. It's fear. Yeah, plain old fear. You see those scary headlines, the stock market charts plunging down in red, and you think, oh my gosh, my hard-earned money could just disappear.
So that fear, let's tackle it head on. Because if you really want to feel good about investing, you've got to understand what the market is actually like. And honestly, it's kind of a roller coaster. So let's talk about how to ride it.
I mean, just take a look at this. Over the last few decades, we've seen some huge drops. Black Monday back in the 80s, the whole dot-com bubble bursting in 2000, the massive financial crisis in '08, and of course, the pandemic plunge in 2020. Every single one of these felt like the sky was falling. But look closer. What's the one thing that happens every single time? After every dip, after every crash, the market doesn't just crawl back. It comes roaring back, hitting new highs.
And this right here, this is the secret that patient investors get. You have to ignore the day-to-day panic and just zoom out. When you do, the numbers don't lie. Even with all those crazy crashes, the average return over the long haul has been over 11% a year. So you see, patience isn't just a virtue. In investing, it's your superpower. It's literally a profitable strategy.
Okay, so we know the market grows over time, but how does that growth actually turn into, life-changing money? Well, we need to talk about the secret engine behind it all. It's this incredible, almost magical force called compound growth.
Now, the concept is actually super simple, but it is so powerful. Compounding is just your money making money. That's it. The returns you get start earning their own returns. It's like that classic snowball rolling down a hill. It starts small, but it picks up more and more snow, getting bigger and faster. That's your money. It's not just what you put in, it's the growth on the growth that creates that explosive momentum.
All right, let's put some real numbers to this to see what I'm talking about. Imagine you start investing just $250 a month. I know, maybe that sounds like a lot, but think about it. That's like a fancy coffee every day or a couple of streaming services you forgot you're even paying for.
Okay, so you do that, you stick with it for 30 years. Over that time, you'd have put in a total of $90,000 of your own money. And hey, that's awesome. That's a great nest egg right there.
But this is where the magic happens. Thanks to that compounding engine we talked about and those average market returns, that 90 grand you invested, it could grow to be worth over $1 million. Seriously, let that sink in for a second. More than $900,000 of that final number isn't money you saved. It's money your money made for you.
And that is why you always hear savvy investors say this. They're not trying to be clever. Trying to jump in and out of the market at the perfect time, it's a fool's errand. You'll lose. The real key to winning is just giving your money as much time as possible in the market. That's what lets that compounding snowball do its thing.
All right, so hopefully you're feeling a little better now. You get the long-term game, you see the power of compounding, the fear is starting to fade. So, let's get down to brass tacks. How do you actually do this? Let's talk about the practical steps. But wait, before we go any further, there's one super important step, a non-negotiable, okay? Before you invest even one penny, you need to build yourself an emergency fund. We're talking 3 to 5 months of your basic living expenses sitting in a boring old separate savings account. This is your financial safety net. It's what protects you so that if your car breaks down or you have an unexpected expense, you don't have to panic and sell your investments at the worst possible time. Okay, safety net in place? Perfect. Now, getting started is literally as easy as 1, 2, 3. Step 1, pick a good, low-cost online brokerage. There are tons of them. Step 2, open the right kind of account. You want something called a tax-advantaged account. Think a Roth IRA if you're in the US or an ISA in the UK. These are like special VIP rooms where your money can grow without you having to pay taxes on it. And step 3, just connect your bank account and move some money over. I'm not kidding. You can do this whole thing on your phone in probably less time than it takes to order a pizza. So you're in. The account's open, there's money in it, and now comes the big question. What on earth do you actually invest in?
Don't worry, we're going to build a super simple, stress-free strategy. Basically, when you're starting out, you've got two main ways to play this game. You could try picking individual stocks. That's like being a scout, trying to find the one high school kid who's going to be the next LeBron James. It's super high risk, takes a ton of work, and even the professional scouts get it wrong most of the time. Or, there's another way. Instead of betting on one player, you could just bet on the entire league to do well. And you do that with something called an index fund.
Index funds are genius because they're so simple and effective. Instead of trying to find that one needle in a haystack, you just buy the whole haystack. For example, an S&P 500 index fund buys you a tiny slice of the 500 biggest companies in the US. You instantly own a piece of Apple and Microsoft and Amazon and all the rest. It gives you instant diversification. So if one company has a terrible year, who cares? You've got 499 others to balance it out. It's the simplest way to bet on the overall success of the economy.
And here's the pro move that makes this whole thing run on autopilot. You automate it. You've probably heard the phrase pay yourself first, right? This is what it means. You go into your brokerage account and set up an automatic transfer for every payday. Just set it and forget it. Your wealth building machine just hums along in the background without you ever having to think about it again. Okay, we're almost there. But I want to finish by talking about the single biggest mistake that new investors make. It's the one thing that costs people more money than anything else, and it's not picking the wrong stock. It's just waiting. It's procrastinating and never getting started. Just look at this chart. This really drives the point home. You've got two people here. They both invest the exact same amount of money every single month. The only difference is that one of them started at age 25 and the other waited until they were 35. Look at the difference in the end. That 10-year delay, it cost them more than half of their potential money. They put in the same effort but got a tiny fraction of the reward, all because they waited.
So let's just wrap this all up. We started this whole conversation talking about the fear of a market crash, right? But what we've seen is that every single crash in history has been temporary. The market always comes back. You know what's not temporary? Lost time. The years you spend waiting for the perfect time to invest, you never get those back. So the real risk isn't that the market might go down. The biggest risk is never getting in the game at all.
So I'm going to leave you with just one final question to think about. We've seen that this is way simpler than people make it out to be. The tools you need are literally in your pocket, right on your phone, and that incredible power of compounding is just sitting there, waiting to go to work for you. So, fast forward 30 years from now, what will future you wish you had started?